Welcome to the luxury world. Get inspired with us today and tomorrow. The watch market has officially crashed. If you've been paying attention, you'll have noticed that prices aren't what they used to be. This is just the nature of the watch collecting hobby. Even the most dedicated collectors will inevitably purchase timepieces that depreciate in value over time. If you pay full price for any watch, like people used to do in the old days, you may expect to lose between 20% and 30% of your initial investment. The phenomenon of the last 4 or 5 years wherein one may purchase a timepiece whose value steadily rises much like Bitcoin nowadays is something nobody has seen before. In the past, one had to purchase a watch and wait 35 to 40 years for it to become vintage before selling it at an auction or antique exhibition to realize significant earnings. However, in the present day, the market has calmed down significantly. So, what does this really imply for the future of the watch industry and the watch market, you may ask? It's simple. First, goodbye to all the watch flippers. Those men who jumped on this gold rush and began pushing their way into advertisements with the belief that they could purchase a two-tone Daytona for $18,000 out the door and sell it for $25,000 overnight. Whereas before, flippers were purchasing watches to make tens of thousands of dollars and expected the real dealers in the market with the real outlets for these purchases to make only $700 or $800, those days are long gone. Now, it will be 1 in a million chance if flippers will be lucky enough to get the retail plus tax of back of what they paid. Now that the tables have turned, they are feverishly attempting to sell these watches, but regular buyers cannot afford them already at those rates. We're simply not there anymore. The market is not where it was in February of this year. So if you purchased any of these timepieces and held off a bit too long because you thought this was Bitcoin, you're going to feel the sting right now. And many of these flippers will have vanished with the wind. Those who were able to properly fund these actual assets rather than enormous credit lines or American Express cards are the ones who will survive. So in short, the people who flip watches first will suffer the most from this adjustment. The problem is that some of these people are going to be fine, and they made a lot of money in the last 2 years. However, others have bought a lot at the end and held onto a few pieces, thinking they would rise to the top. And this correction could wipe out all the money they made at the start. Approximately 2 out of every 3 watches that left the commercials were flipped for profit by these flippers/profiteers. And by the end of the day, even the brands will feel a little bit of this drama, because now nobody's really eager to buy these watches so much at retail anymore due to the current market standing. The issue with flippers is that they have no skin in the game. They don't take the time to understand the etiquette and spend time learning how to properly do this watch selling business, because it's not their business. It's simply a chance to sell watches and make money. The next victim of these adjustments will be the overnight watch dealer. Aside from the watch flippers, there are also overnight dealers who rushed into the gold rush. Overnight, the site says, hey, let's stop selling sneakers and start selling watches. The problem with these guys is that a lot of them are good people, but they may not have seen the warning signs early on in the market. If they were caught holding the merchandise after the price dropped by 20% to 30%, they'd be in a lot of trouble, especially if they're using sponsored money or a line of credit. One of the key difficulties and huge dramas that these people are going to have right now is that they don't have any end customers to sell to, since most of their transactions were done business to business or flipper to flipper. Now, the genuine dealers are still purchasing, but they are buying more cautiously than in the past because the prices have dropped. This is a major difficulty in the current market. Here's the catch. You've got a customer who wants to buy a Nautilus which was originally priced at $200,000 but is now $150,000. The issue is that they want to make a few transactions, and although it is understandable that they would like to purchase their Nautilus at the current price in July of 2022, now $150,000, they would prefer to be credited with their trades based on the pricing in February. Some of these people spent much above retail, and it's challenging and natural that no one wants to take a loss. Some of these individuals just can't let go of the notions that their $100,000 meteorite GMT sold for $100,000 in February, but is now only roughly $65,000 to $75,000, or even $70,000. A loss of $30,000 is still something that can be considered an extreme loss. However, in truth, they aren't losing anything just because they didn't buy it. Rather, they are missing the chance to generate money out of it. Moving on, Those of you back home who have yet to purchase your watches will be pleased to know that discounts are on the horizon. Discounts on timepieces are plentiful in the midst of the pandemic. The timing is right to purchase a wristwatch. Everyone wants to know if prices have hit bottom, but the answer to that is we won't know for sure. That surge at the beginning of this year was simply much too powerful, and prices went way too out of hand. So it's possible that we'll see prices return to where they were a year ago. Unlike Bitcoin, watches are tangible assets that can be invested in. Hence, the value of your portfolio is likely to rise over time. It's definitely not with crypto. So much to say that with all the profits, there must also be losses. The key is to know when to cash out. Overall, even in the current market, watches are safe bets. But where the market is headed is anyone's guess. The last half of 2018 and the first half of 2019 could prove to be particularly illuminating in this regard. Although a little rebound is possible if prices are going up again. But don't expect them to fall as much as the place that once happened wherein you could get a Panda Daytona for $15,000, since that's not likely to occur anymore. Even if you've shopped around until you're blue in the face, you still might not realize that the watch market bubble has burst. Cryptocurrency, timepieces, automobiles, and real estate all blew up, and the economy is showing signs of weakness. Looking at how quickly the stock market bubble burst and how quickly other sectors followed suit. But here we are. And the good news is that if you've been buying watches for the long haul and are truly invested in the watch game, you're going to be alright. The bad news is that if you're a watch flipper in your mom's basement, you should definitely start getting worried. That concludes our video for today. Let us know what you think by writing a comment in the comment section below. If you did like this video, don't forget to smash the like button below as a sign of your appreciation. This is Luxury World. Thank you for watching and see you in the next video.